Typical myths about credit scores. You may have more than one credit score. Did you know that? Did you realize that your income has no bearing whatsoever on your credit score? If you're unaware of this, continue reading as we debunk prevalent fallacies about credit ratings. Myth: everyone has a single credit score. Equifax and TransUnion are the two credit reporting companies in Canada. Based on the data that creditors provide them, these firms generate credit reports and credit ratings for Canadian clients. Sadly, not every creditor submits information to all of these organizations. A creditor might only submit a report to one agency. Additionally, creditors could only update the credit bureaus with your most recent information once a month, or less frequently in some circumstances. As a result, it's possible that Equifax and TransUnion don't have exactly the same credit information about you, nor do they employ the same credit score calculation tools. This implies that based on the information they have on file for you and how their software evaluates the information they do have for you, each of these organizations will produce a different credit score for you. Myth: you may obtain your credit score once per year for free. Both Equifax and TransUnion offer free credit reports once a year, but you typically have to pay to get your credit score. With the help of our credit score estimator tool, you may get a general sense of your credit score even if you don't want to pay. Numerous businesses and organizations are now providing free credit ratings as well. These include Credit Karma and Borrowell, which offers free credit ratings in exchange for sharing your financial information with advertising, and RBC, the Royal Bank, which offers free credit scores to its clients. The banker will request your consent to examine your credit whenever you apply for credit or create a new bank account. You can now inquire about your credit score with them. If you wish to raise your credit score, you may also ask them to describe the positives and negatives they see on your credit report. Click here to learn how to get your free credit report now. Myth: a good job or high earnings will improve your credit score. Your kind of work and your income are excluded from the credit score algorithm. It doesn't matter if you're famous or wealthy. When a creditor or lender requests a copy of your credit report, your occupation may or may not be disclosed to the credit reporting agencies, and your income is never revealed. There isn't even a spot for it to be put on your credit report. Although it has nothing to do with your credit report or credit score, lenders place a high value on having a steady work and a strong income. Your credit report does not reflect your capacity for making payments, it merely details your payment behavior and history. Myth: couples have identical credit scores. Everyone has a record under the credit reporting system, which is analogous to the system for issuing driver's licenses. Nobody exchanges records. You cannot request that a police officer who pulls you over for speeding record the ticket on your spouse's driving record. If you are at fault, it goes on your account. Your credit report is the same way. If you are late with payments on a debt that is solely in your name, just your credit report will show the late payments. However, if a debt is joint, both credit records will reflect the late payment. Even if you and your spouse are jointly responsible for all of your debts, it is still unlikely that your credit scores will be the same for a number of reasons, including the fact that each of you has likely had credit for a different amount of time, that you might have had a debt in just your name within the past 7 years, and the fact that not all joint debts always appear on each person's credit report. Yes, this is weird. It is one of the system's flaws. Myth: when you get divorced, your ex-spouse won't have an impact on your credit score. When a lender approves a loan credit application for you and your spouse based on a joint application, they are doing so because two persons have agreed to repay the amount. A lender's perspective is unaffected by the fact that you no longer reside with your spouse or are divorced from them. You or your ex-spouse must pay off the debt with a new loan or reapply for it in only one person's name if you wish to change who is accountable for it. If you don't do this and leave the bill unpaid, you are still entirely responsible for paying it back. It is your responsibility to make the payments if you believed your ex-spouse was paying off the debt but the creditor advises you that they have stopped doing so. Your credit may be harmed by the missing payments that you were unaware of if the creditor takes the time to locate you. Therefore, if you still owe any debts jointly with your ex-spouse, it may affect your credit score as a divorce only dissolves a marital contract, not a joint borrowing contract. Myth: filing for bankruptcy can permanently damage your credit. Depending on the province you reside in, a bankruptcy will appear on your credit report for 6 to 7 years after it has occurred. Your credit score will suffer at that time, making it more challenging to get credit, due to the bankruptcy notation. To give you a fresh start, the bankruptcy record and all other records of poor debts, that are the same age, will often be deleted from your credit report after 6 or 7 years. There are a number of viable bankruptcy alternatives that may be a better option for you if you are having financial difficulties and are thinking about filing for bankruptcy. To learn more, click here. Myth: eliminating your debts will give you a perfect credit rating. While being debt-free and keeping it that way is a great way to live, it won't instantly raise your credit score. Your credit score is determined not only by the total amount of debt you have, but also by your payment history and credit behavior. As long as you keep at least one current credit account open, such as a credit card or line of credit, having no debt will benefit your credit score. The credit scoring algorithm cannot determine how you currently manage your obligations if you have no open credit. The credit scoring algorithm can tell you are using credit responsibly if you use one credit card infrequently and pay it off in full each time you receive a statement. Learn more about credit reporting and credit scores. Although credit scores might fluctuate on a monthly basis, understanding how the credit scoring and reporting systems operate will help you make borrowing and credit decisions. Your credit score doesn't need to be actively sought for on a regular basis. Instead, put your attention into carefully managing your finances, budget, and debt. Your score will take care of itself. See comments for links to partners that can help you understand your scores.